Hello ladies and gentlemen, and welcome back. We often get asked the question when to look at gaps and when to ignore them. It's a great question, and of course in today's video we'll be taking a look at whether this one is going to be filled. At the moment the markets are running hot. We've seen Netflix come out with a slightly better result, banks so far across the board in general beating the expectations, although they're not that high, those expectations, and Tesla coming in around what the expected numbers were. The market in general has liked this, and this has led to some massive asset changes over the last week. Some people call it crazy. We might be calling it a bit of a trap. So let's take a look at what we mean by trapping and of course where the next levels are for the markets across the world. Stay tuned. This will be a good one. Well, welcome back everybody to the Daily Show where we talk about stocks, commodities, and cryptos. If you like any of those markets, why not consider subscribing? And of course, give us a thumbs up if you find value in today's video. Let's talk about Tesla though. Of course, the stock has risen after hours. After an okay Q2, a little bit better in some ways, a little bit worse in others. What was the most interesting point though is that Tesla actually sold 75% of its Bitcoin holdings. Interesting that they did that. Of course, what happened was Bitcoin fell straight on that news. It has shown a little bit of recovering after that, but 75% of a fairly nice Bitcoin holding is gone now from the Tesla books. Where does this take us in terms of earnings beats and misses right now? We're in earnings season. This is super important. Are the market's expectations being met? So far, it's okay. It's not usually like it is where we usually come in around 75% beat rate, but 62% with already low expectations, beat sitting at 69, misses at 42. Do remember to subscribe to the channel as well because we will be covering next week's massive earnings, Apple, Amazon, Microsoft, and so many more coming out with the big earnings. If they miss, watch out down below for the markets. Let's take a look at what happened in the session in the last 24 hours. Basically, it was a little drop in the morning followed by a monstrous rally. This was actually quite gettable if you were watching the market in the morning. We'll have a look at the charts later on to show you some of the key levels that were happening. And then it fell off during just after lunch into an okay rally at the end of the day. Nothing really too much to write home about. Another strong-ish day on the markets with a new high put in place through that lunchtime session. Let's have a look at the last 5 days in the markets. What's it all been about? Semiconductors. Funny how somebody in the world, if anyone knows, purchased Nvidia calls right before they started ramping up pretty heavily. 11.22% on semiconductors, showing that really it's risk on in the markets right now. Clean energy, consumer discretionary, which we love to watch, and tech all being the best performers over the last couple of days. What hasn't been good? XLP, XLU, more of the defensive style. Of course, gold also lagging heavily behind. What this is telling us is that in terms of rotation, maybe the bottom is in, and we'll talk about that soon. I'm not so sure about that just yet, but certainly at the moment it's risk on and everybody's feeling great about the markets all of a sudden. We'll do a poll later on today, so make sure you vote in that poll. I'm super interested to know what the community thinks about the markets right now. Are you bearish or bullish? Well, we'll find out very soon, hopefully with the poll. Let's talk about the general ways that markets move. So at the moment, you'll notice that we've hit a very important factor. Basically, whenever we hit this, it means that smaller traders, these are the ones that put on smaller amounts of options, puts and calls, have turned net bearish. In fact, net bearish has happened just recently. Funnily enough, what's happened? The market is ramping through that. Now, this is not the only time it's happened. It's happened before near bottoms and lows in markets. You'll notice with the GFC, what happened was everyone turned net bearish. The market rallied a little bit, and then boom, a new low. The market rallied a little bit and then a secondary dip later on. So does it mean the bottom's in? It could, but it could also mean, like the GFC, we get another turnaround towards the negative side. And a lot of bigger investors, such as big bond managers, are still calling for that 3,000, 3,200 SP 500 either at the end of this year or into the first quarter of 2023. Remember, we don't know we've beaten inflation. Even if we've hit the high, we do not know that it has been beaten. I want to just bring up the idea of average volatility index, or VIX, as well. For anyone that doesn't know, the VIX is kind of like really just a good barometer of how freaked out everyone is in the market. 2022 so far, 26.3 has been the average VIX. Obviously, we've seen higher before and we've seen much lower. If you want to take the average over time, basically whenever the market's underneath 20, and we'll look at this and we'll revisit it soon, when it's underneath 20, it means a normal kind of bull market. And when it's above 20, we have to be a little bit fearful and, of course, nimble and fast in our trading. I like to think of it as it's a day trader and scalper and long-term investor market when it's above 20, and it's more of a swing trader market when it's below 20, which is most of the time. What other signs do we have that maybe the worst is still to come? Well, of course, one of my best readings is the number of yield curves inverting. As we mentioned in previous videos, 40% plus currently inverting. By the time the Fed hikes to its expected 3.5% by maybe the end of 2022, we might even be seeing more inversion, maybe 50% plus. It is something that has not missed ever in the last 50 years. So it's got a 100% track record of calling recessions before they happen. Are we already in one? Some people would say yes. Of course, if we do enter a recession, same stat I'll always bring up, average recession pullback is 32%. At the moment, we've hit like a 22 to 23 on the SPY, maybe a little bit lower. So we technically haven't done the average percentage down. Again, that's why this could all be part of a longer term trap. We've got to consider all possibilities at this stage in the markets. Some bulls will argue this fact here, which is that usually we see the growth stocks bottom first. I am here to say absolutely, growth stocks are always the first one to show the great turnaround stories. And we saw this during the dot-com bust and the GFC. In both cases, the NASDAQ bottomed first, or the QQQ, before, of course, the SP 500 came later. It's the nature of the sectors, and usually the market will move into growth on the recovery, and also things like consumer discretionary and other sectors. It's something that's well known, but again, if you don't know it, there you go. Still a huge amount of shorts from the leverage money in the markets. I'll continue to update you on this. We've talked about it many times. And remember the earnings coming forward into the Thursday. We have Snap, so maybe that will be another sign of the times on whether we got a beat or a miss in social media. And of course, Twitter as well, a little bit later on the Friday before the open. So still some big earnings to come, but the biggest ones of all will be next week with Apple, Amazon, and everything else. So make sure to follow us because we will be coming along for the ride on that one. It's sure to be fireworks. Let's talk about the VIX, the volatility index. As we mentioned before, underneath 20, the normalized market. Currently moved underneath, interestingly enough, 24. Not a bad sign for the bulls. Last time, or actually all of 2022 so far, once we've cracked this level, we've tended to move back down to 20. That would probably mean the stock market comes up, and we'll talk about that more soon, but that's where the VIX is sitting. In terms of yields versus the S&P 500, we know that the S&P 500 should not be going up and yields going up at the same time. What I'm not seeing is the US 2-year coming down. So the stock market's coming up. This is kind of hovering slowly higher. So if you want this to be the bottoming in the market, we really do want the 2-year coming down and stock market coming up at the same time. Otherwise, it's an early warning sign that we're in most likely a bull trap. That is a market that goes up and then instantly switches. What's a good sign for the markets right now? Well, of course, it's the US dollar dropping. If cash is king at some points, but when cash starts to go down, what happens? That money flows into assets. Remember the money flow. When you're scared, you hold cash. When you're feeling great, possibly you start investing it. We've had that turnaround story so far. Big demand zone, big support for the US dollar. Watch this over the next 24 hours. If we snap that and go down, watch out down below because the US dollar could continue to weaken for a little period of time. And the general idea would be to maybe come back to the weekly 20 moving average. So that would be super exciting for, of course, bulls in the market right now. US dollar, I think the euro, US dollar, any currencies right now looking good towards the trading side. At this stage, it looks like shorts might be coming through. Let's move over to gold. Gold is still struggling. So even with a weak US dollar, gold can't find bid. We're not updating anything on this just yet, but we will be watching gold into August. I'm still interested in it. I want it down to this price and possibly lower, and we need to see structure. Keep updated on this one. We will come back to it. US oil weakened. Of course, it fell through that level that we were talking about in the previous video. It then rallied back up. It's found some shorts. It does look overall more weak than strong. Do remember the general trend line has held on the higher timeframes, so it's still really in a downtrend at this stage, and the smaller timeframes are showing that weakness as well. So maybe we'll crack finally through the 95 in oil very soon. This is showing us that inflation probably has been peaking, that really the market kind of still expects yields to do this, which is a hike and then a cut in 2023. So effectively hike. Oh, we ruined the economy. Cut. That's the idea that the bond market has. Might be wrong. It might be hike. And like Ackman says, hold a very high rate for longer. Either way, it looks like demand is decreasing in some ways for oil, or at least the traders are selling it down. We'll watch, we'll continue. If you want to go bullish on oil, one of the key levels to be watching is going to be around this 105.20 per barrel. Let's move over to copper. What's copper doing? Well, it's been drastically sold off. Of course, concerns in China have really lowered what's going on here with the demand for copper and for other metals. We see this as a health indicator. They call it Dr. Copper for a reason. Basically, it's back at a previous resistance point, which could act as support. So what I'm looking for here, and a lot of other traders are looking for, is not only considered increased volume like here, but we're also looking for structural base. We'll continue to watch copper, because if you're feeling like maybe metals have been oversold, it's at a zone or an interest area that could be looking for that buy the dip into metals. Remember, inflation's not gone, yet if you look at certain sectors, like let's bring up the metal sector here, take a look at this turnaround story here on metals. We went all the way back down. This was the Russia-Ukraine kind of invasion period. We've taken all of that off, come back down to a support, and a lot of you aren't looking at this sector, but look at what's happened so far. Nice little turnaround. Maybe there's some relief rally in this at the moment. Move over to Tesla. After hours has pushed up, but it was only up about, I think, 1% and a bit. Let's have a look at the 1 hour chart here, and we'll just refresh that. Are we outside of our symmetrical? Well, not quite yet. We probably need to breach something like a 762, which it looks like we will be into the open in the next session. Maybe a 762, weakness to fill the gap, and maybe strength coming back through. This will depend on the rest of the market finding bid, but Tesla wasn't a shocker, and that's usually a good thing. Apple over here, when we go through the trend line, still looking fairly strong into the earnings next week. Wouldn't mind to see it at maybe like a 156 before the earnings. That would be a good level at key resistance ahead of the news. And then we find out really the direction of the market. A lot of you have been texting and messaging in the Discord community, our public Discord community. Join it, links down in the description below and the pinned comment. If you want to join 10,000 other traders sharing great ideas. A lot of people loving the Apple right now. Fair enough. If we move over to the Chinese tech stocks, a lot of people are messaging me, Tom, what do you think about this? Do you reckon it's bottomed? Hey, it's got the right structure formation towards that. It's been hovering for a while. A lot of people are scared or forgotten about it. It is at an interesting level. And I think any technical analyst will look at this and say, maybe it's starting to look better. Looking at the sum of the stocks underneath could be really important as well. Checking the volume component. Does it look like the composite man? That is, the bigger traders are actually picking up this stock in large abundance and then looking towards maybe a buy. Remember where it came from as well. The tech stocks in China have gone from 108 all the way down to $40. So basically they are back at prices not seen here on the QQQ since 2014. There's always risks, but it is a little bit more interesting than it has been for a while in terms of investors, maybe not traders in that one. Let's move over to the Dow. Little breakout here, still long leg doji. Got kind of equal highs, so that's going to be a big thing for the next session. Watch the Dow, maybe worthwhile seeing if it breaches this high. Long leg doji usually means equilibrium in the market or indecision. And then here we have another long leg style doji candle, equal kind of lows, equal highs, breach out, coil breach, could be an explosive move, obviously looking to fill the gap and maybe even move back to 32,750. Things are looking still okay on these markets. Another market looking better is the Russell 2000. Look at this, breach, downward trend, bang, straight out. Strong move here by the Russell. It was all about hyper stocks. Haven't filled the gap just yet, but it certainly seems like it wants to. Whether we have a pullback before that, we don't know. Certainly an interesting point. NASDAQ, another strong one. We've got that huge downward trend, which will probably really convince people if it breaches this that we